What's up, everybody? Chris over here, founder of Pollinate Trading, and it has been a minute since we've done any updates here. It's 2022. We're coming into the last quarter, where we're into the last quarter of pretty, a long bearish type market. We're in a neutral market regime at the moment, but it has certainly been bear quiet markets throughout. What I want to talk about is we've got a couple of really good, really high performing setups that have, first of all, I'm going to show you one that has been performing quite well for the last couple of weeks and one that just fired off today. So you can see, hey, who knows what the outcome is? It's, the win rate's about 70%, but that doesn't mean that it's 100%, right? So we're talking about the Swing Beast Momentum system. It's a swing trading system, and I'm going to cover, first of all, I'm going to go to like the first overview of momentum trading and swing trading and how I built the system. And then we're going to get into two live examples, one that a trade that we've been in for a week or two now, and one that just fired off today. So you can, I don't want to say call my shot because it's the system. The system does what the system does. So, like no ego on that. But I just want to give you an idea of what you would be expecting to see with the Swing Beast trades as we go into this new trade. So I'm going to share my screen here. All right, so we'll start out with, this is actually the first module of the Swing Beast momentum system. And it's just, as you can see, it's built for equities. I use it with deep out of the money options because it's a known time limit and a known number of trading days before exit, and it has the momentum to carry with it. So first off, let's start with a disclaimer. This is not a recommendation to buy or sell any securities. This is for educational purposes only. Trading is hard. You will lose money. Hopefully, after some long, hard work, you will be better. This is not a speed pass to billions of dollars. Let me just give you a quick heads up of who I am. My name's Chris Dover. I'm the founder and head trader at pollinatetrading.com. I have over 23 years of experience as a prop trader, a portfolio manager. I've worked at a hedge fund, mostly trading quant and momentum systems. I've traded the dot-com collapse, whatever, 9/11, global financial crisis, flash crash, Brexit, Volcapocalypse, 2018 meltdown, COVID, and this last year of, I don't know what we're calling 2022, but 2022 bear market. Now, why would I want to trade with a system? Systems provide predictable, repeatable setups. You can test and track them historically to inform the future. They can give you a statistical outcome prediction of what the future might hold. And it also allows you something to measure and compare your results to improve. For example, if you wanted to improve on, as they say, what gets measured matters. So if you want to make money over time, then you want to start finding the things that work and do more of that and eliminating the things that don't work, right? With a system, you can have the predictability of knowing that a trade, that historically that setup has worked X% returns and all that. So it's predictable in knowing that you have a setup, not knowing what the outcome is going to be. And it's repeatable so that it happens enough times that you can take advantage of it. Very important factor in systems is repeatability. When you have the expectancy, which is total returns divided by total number of trades, or total trades divided by total returns, if it's a positive number, then you want to take as many shots as you can with that system. And then you want to be able to test it historically. Now, what we do at Pollinate is we focus heavily on market regimes. So where you have high and low and neutral volatility, and you have a bull or a bear market, right, directionally, all five of that makes 5 different regimes. Each of those 5 regimes has different characteristics. You have market topping and market bottoming behavior at both ends. You have nice trends in the middle, and you've got that sideways action at the exact middle. So when you can compare your results in all those different regimes, you can say, okay, this is what I would expect from this type of trade in this type of market. So the idea behind why is momentum so important, and why do equities? Why use equities here? So markets move between periods of low volatility and periods of high volatility. And these moves leave patterns. These patterns are repeatable because humans trade them. Human emotion is repeatable. These patterns are predictable because humans trade them. Human emotion is predictable, right? How many times have you seen a stock or something like rip up 2, 3, 4, 5%, and you thought to yourself, I'm not really into that, and then it starts going, and as it gets 3, 2, 3, 4, 5%, you're like, I got to get in now. It's going to 10 or 20%, only to watch it stop and drop, right? That's pretty repeatable. Most people have those excitable feelings, the same as something that continues to go down. Same sort of feelings. So the momentum edge is that investors either overreact to important information or they underreact to it. Like winners from the past 3 to 12 months continue to outperform losers over the next 3 to 12 months. And mostly, let's explain why. It's underreaction, pure underreaction to the information, right? So people think, okay, yeah, that was a good one. They beat earnings, or they're doing an update to their operating system, or they're adding some new silicon chip to a product, or they're harvesting natural resources in a more efficient manner, right? Okay, that news comes out, initial reaction. So you get this big overreaction, right? And then you think, oh, you see the chart. Oh, okay, well, that news is out. I missed it. Oh, well, nothing to do here. Except the stock continues to move and move and move and move on that new information, right? And what's required is that it's higher than the expected returns, right? So when you see that breakout on the news, that's expected, right? Let's say you see the stock's trading at 100, it goes to 105 on the news, and then you see it start to pull back a little bit, and you're like, oh, okay, yeah, well, I missed the news, whatever. And then the next time you see it, it's 110, 120, 150, right? So your expectations were that it would be done at about like 105, 110, but the reality is it just keeps going and going. One other point on that is I have a phrase about momentum, is it goes further and lasts longer than most people expect. 80% of the time, an asset is going to be in a mean reversion environment. That means it's going to break out and come back to the normal area. How many times have you bought something you thought was going to break out and it went right back and stayed there, and then broke out again and stayed there, and then broke down and stayed there? Like that happens most of the time. And so for a stock to take off, it has to have that disbelief. People have to not believe that the move is actually a legitimate move and that any day it's going to return. And so people who buy, they sell early, and then they see it go higher, and then they have to chase back in. And then on top of that, you have people who see the breakout move, and then they've seen so many instances of a market failing to break out, so it mean reverts, so they go short. In both instances, the trader has to buy either buy to get in if they're chasing, or they have to buy to cover their short position because it's going against them. That's really the secret to momentum, is that it goes further and lasts longer than anybody expects. After 12 months or so, it becomes obvious that that was the thing. But while you're in the middle of it, you have complete disbelief. And because it's easier to be a pessimist, or it's easier to come up with reasons why something won't work versus getting on board with something that is working. So many people find themselves completely off the radar. And then on top of that, you have one of the biggest algorithms, and don't get caught up in the fact that it's not an actual like coded algorithm out there, but an algorithm is, if this happens, then do that. Some of the biggest algorithms in the market are, one, it's the end of month or beginning of the month dollar cost averaging of 401ks, IRA, retirement plans, right? One of the other ones is buy if it's above the 50-day moving average, sell below the 50-day, exit the position below the 50-day moving average. So when you add that 50, 100, 200-day moving average, as simple as it sounds, the largest amount of people, and it could just be a small amount of money, could be $100 or $1,000 every month, but the vast majority of market participants, of the investor class, not the trading side, not the fund management, not any of that, but the actual like regular human, a lot of them just kind of go, okay, well, I'm going to be long S&P 500 as long as it's above the 50-day or the 100-day or the 200, right? It's a very simple algorithm, but that actually has a lot of weight. So when you find yourself in a momentum trade, oftentimes when it's above the 50, 100, 200, whatever it is, you'll find that it keeps getting a bump every month or every week. Like it keeps just perpetually going. That's because that dollars are flowing in to something that's trending. And for the unsophisticated investor who's just dollar cost averaging, they're seeing it go up, so they're buying it, right? That's ultimately what the momentum edge is. So some additional edges we use with the swing beast system, and one of the biggest edge we have in all of our trading is our position sizing and risk management. We don't want to ever risk more than a percentage of our portfolio on any one trade. So that means if we have a $100,000 portfolio, $1,000 would be what we would lose if we lost on that trade. Not, you don't just buy $1,000 worth of, let's say, Apple. You would buy the appropriate size that if you stopped out, you would lose $1,000. So maybe that's 100 shares or 186 shares or 52 shares or something. Another edge that we have is defined time windows with seasonality. So there's certain months and times of the year that are just naturally bullish. Since we're just coming off a midterm election season, a lot of people have been talking about once midterms are done, then markets tend to rally into the end of the year. That is historically an edge. Another one we have is market regimes. Again, we have bullish, bearish market regimes. We have high volatility, neutral volatility, and low volatility. Identifying an asset that's in the appropriate market regime where the characteristics of it are so good that it allows a trade to extend over time because it's just constant buying and buying and buying. And then finally, we have price discovery. Once we start moving and go to all-time highs, then there's no inventory, there's no trend lines, there's nothing that technical traders are going to be able to put onto the stock. So it becomes a price discovery mechanism. So let's talk about the strategy, the swing beast momentum strategy itself. It's something you can use a small account or a large account, which is kind of nice about a lot of these, because a lot of systems out there require a large investment to be able to work over time. With the use of options, with the use of deep out of the money options, especially the way I do them, you can take a small account to a large account, as long as you're consistent and obeying the risk management. It works really well for an established, well-funded trader too. So let's say multi-million-dollar account, and you just want to passively be able to grow, maybe not even multi-million, but like a large account where you don't have the time to be day trading, and you want to come into the market. Maybe you already have your portfolio and everything, but you want to come in and catch an extra whatever premium trading. Like me, I trade 3 stocks using this system. This year it's been Apple, Next Energy, and Pepsi. Each one of those represents, 4, 5, 6, 7 trades per year where I can come in, put on a low risk, high potential return trade. I can do it in a minimum amount of time. It takes me about 15 minutes to put the trade on at most. And of course, even if you aren't well established, you're not affected by the pattern day trading rule, because this is which is, you can only do so many trades during a day or within a week period or something, if your account is under $25,000. But if you're without this system buys and holds for a month to 3 months, depending on the asset it's trading. Could go for weeks too. And then of course, if it stops out early, it stops out early. But the point being is you're not going to flag that pattern day trading rule. So you can start with a smaller account. And then you're just going to be in the top performing assets of that period of time. Right. So you're not going to be chasing bottom feeding assets. You're not going to be trying to catch falling knives, as they say. You're catching things that are already in a well-established trend. And so that's going to, or have established characteristics that it is the beginning of a well-established trend. And so people they're going to follow you on that. So you're trying to get in after it's safe, after you've been convinced that it is an effective trade and that it's going to work. So the next module in the course, which this is just module 1 of the course. The course itself has multiple modules with new updates to the Swing Beast 2.0 system coming out here shortly, but it'll expand to that. But let's get right to some live stuff so we can get out of this theory. So one trade that I've been in, so we got in, that would have been at the end of October. Currently, it's the middle of November here. We got into Next Era Energy, NEE is the symbol, back on the 28th. And I think somewhere in this day, I bought some deep out of the money calls. Deep out of the money calls are options that trade under a 20 delta. And if you're unfamiliar with that, it's basically very cheap with, it kind of has a low probability of success, but the success that it can have is, 10 to 1, 50 to 1 type of return. So you can put in $1 and get $50 back, $20 back. Last year, during the fourth quarter of 2021, this is what we were doing with the NVIDIA and Tesla and Microsoft and Apple. I had a trade that I bought $1,000 worth of Apple calls that ended up being something like $18,000 within a few weeks. And it's not always like that. Trust me, it's not always like that. You can go through periods where in fact, this past trade in Apple I had, basically, I think it was about $1 I paid, and it ended up being worth about 10 cents. But it is back on again. So the point being is that's like what, a 10, 20 to 1 ratio. So if you have 50, 60, 70% win rate and you make $10 for every $1 you lose, that's quite a good strategy. One of the secrets about Swing Beast is to narrowing it down to just a handful and getting the seasonality right. That's one of the core components of the upgrade to Swing Beast 2.0 that I will be releasing here shortly. So let's take a look at Next Era Energy. This one would have gotten in at, and I don't have the trade at the moment, but we paid, if I recall, 85 cents, and it is trading at around $3 right now. So, 2 to 3, 3.5x returns in about 2 weeks time. Okay. This trade tends to, as you can see, this is a bit of the back test here. This trade tends to work about 65% of the time. And it's done pretty good through this last 2022 timeframe. There was a loss right there. And you can see time entry, there was a loss right here. And here was the big loss. That would have been in April at the big rally where energy just fell apart. So there is basically this would have cost you $1 to get these calls, maybe even $2, but it just goes worthless. So you lost $2. And then you get on this one, and it can double or less, similar here. And then here currently we're tripled in this position. So that's the first one. And it came, believe it or not, we got in this trade after earnings as opposed to before earnings. Best place in the world to get. In fact, the equity earnings system actually was long this one. The EES strategy, the earnings strategy we run, was actually long going into this. We exited and then we had the swing beast take over. So it's kind of a double dipping setup there. Now, that's the past, right? We're already in this one. We've already locked in profits. We're not going to let this one go against us. We're just going to let this one work. But here's one that just fired off today. And as crazy as that I mean, at the moment, NASDAQ's up 3% on the day. And Apple's up about the same. So, let me show you the returns that this one typically has. 67% return, even better at a 2.2 profit factor, meaning, you're gonna at least double, and that's on the equity side. That's just buying the stock. That's not buying deep out of the money calls. Now, the original trade I got in over here. I paid, I think, $1, and it went all the way down to about 10 cents. It's since worked its way back up to about $1 today. But today we're firing off a new long system. Let me take this out of the way. We fired off a new buy entry on Apple. So today is Tuesday, November 15th. It's about 7 minutes before the U.S. stock market, New York Stock Exchange open. And we've got a buy signal. So we'll be looking to buy some deep out of the money calls on Apple. Typically, this is about a month-long position in Apple. And so the trade's probably going to be looking at anywhere from the 165 to the 170 areas. And, what's kind of interesting about that, this is just anecdotal, but you can kind of see the trend line here, right? Kind of see that if we are starting another leg up like we had back in June. By the way, we caught this one in June. Over here, July, I think we caught that up to there. Let me see if that shows up on this one. Right here. Yeah, so got long here and then exited up into there. So a really nice one on that one. That was definitely I think that was something like a 20x return. And then we stopped out here, and this one is back to about break even over here. So it's not 100%, believe me on that. But we do have some key areas over here from 160 or so, 158 to 165, up to the 170 and all the way up to the 175 type spots on Apple. And if that does work, again, we're risking $1 to have the opportunity to make 10, 20, 50, whatever it ends up being. I can't really say, but in a calendar month, so mid-December is the exit on that. And so we use timed exits on that. So anyway, that's the swing beast system. We are upgrading it to a newer version, but I wanted to get that out there because I know a lot of you picked up the system and have been using the system quite well. In fact, the reason that we're doing a lot of the changes here is because so many of you collaborated and said, hey, I've been noticing this, and allowed me to do a lot of my research to help improve the system. because it's one thing for me to trade a system and do all the research and all the back testing. It's quite another thing to have other people independently with independent views, a different life experience, different economic environments, all that to give me feedback and say, well, what about this? What about this? We could increase our win rate, or we could, increase our returns, or we could get a lot more stable returns. All that data and all that feedback has been really useful. So that's the SwingBeast system. PollinateTrading.com/SwingBeast. You can get access to it. And if you are a lab member, you get 50% off. So a little secret is join the trading lab. And then you get half off on SwingBeast, equity earning strategy, the Curvy day trading system, system mastery, any of the courses, anything once you're a member of the trading lab. That's just, if people want to join us in there, we're day trading futures all day long, in addition to covering subjects and staying connected with each other through the trading day and throughout the weekend. All right, that's what I got today. I'll start being a little bit more prolific on what we're covering, and we'll follow this trade through. Have a wonderful trading day. I love you all.